This is Debt Free in 30, where every week we take 30 minutes and talk to industry experts about debt, money, and personal finance. Here's your host, Doug Hoyes.
Here on Debt Free in 30, we often talk about consumer proposals and bankruptcy as a way to deal with debt, but the vast majority of Canadians don't need to take that drastic a step. The most logical starting point for most people is to reduce the interest they're paying so that more of their payments each month go towards principal. Getting a lower interest rate mortgage or credit card is often a good first step. But how do you do that? Your bank only offers a limited number of mortgage or credit card products, so you need to shop around, but how do you do that? How do you find the best deals? So that's the question we're going to answer with my guest today. So let's get started. Who are you? Where do you work? And what do you do?
My name's Alyssa Furtado, and I'm the founder of RateHub.ca. And RateHub is a financial products comparison site. So we cover things like mortgages, credit cards, GICs, high-interest savings accounts, and we're really helping consumers find the best products to suit their needs and also empower them with education and data to make the best decisions.
Excellent, and that's why I wanted to have you on the show today, Alyssa, because I'm all about that exact same thing. You got to empower yourself. You got to do your research. You got to educate yourself so that you can make an informed decision. And I just want to let everyone know, and I'll give you my standard disclaimer here that, this is the Debt Free in 30 show. It's my show. I get to pick the guests. No guests are paid for being on the show. No guests are paying me to be on the show. This isn't a commercial for Alyssa or for RateHub, but I wanted to have you on the show because I think you've got some valuable information to share with us today. So before we get into the specifics of RateHub, give me a bit of your backstory. I mean, pick up your life from university and what you do after that and why did you start RateHub?
Great questions. Going back a few years now, after graduating from university, I spent 2 years in a strategy consulting role. Learned a lot, was working with amazing people, but just really felt like it wasn't a long-term fit for me. And so, I was doing some soul searching. Did I want to become a teacher because I'd been passionate about education? Was I still interested in business? Just, so many thoughts running through your head. And I was actually catching up with a classmate of mine who had spent the last 2 years at a mortgage brokerage, and he was building out their offices in Ontario and Quebec. And our conversation really started to get exciting when he was talking about a website that his company was buying over $20,000 worth of mortgage leads each month from. And when I did a bit of searching, I discovered that it was Canada's only rate comparison website at the time. So you can probably imagine our conversation. We were young and naive and thought, so it's just a website and it aggregates rates and you're paying them $20,000 a month. We'll launch in 3 months and be printing cash and move to a beach in a year. And it seemed like such a simple business idea. And so I left that conversation really excited. But I'd booked a 2-month trip to Hawaii, so I boarded the plane and went off on that next adventure. And while I was in Hawaii, really had the time to think about what I wanted to do next. And I just kept thinking about this business idea. And it combined a lot of the things that I was passionate about. It had the education component. There was an opportunity to really, help consumers through all of their big decisions around financial products. But it allowed me to still stay focused on business, which I studied at school and was interested in pursuing. And then had the potential, I think many entrepreneurs are motivated by lifestyle. It had the potential to help me, be able to travel. And if I built this website, live a very fluid lifestyle. Now, I don't think that part's come to fruition because I think that you always underestimate the amount of work involved, but it's honestly been such an amazing and exciting ride over the last 5 years. So when I got back from Hawaii, that was January of 2010, I dedicated full-time to the website and have been working on it for the last 5.5 years.
And this isn't something that you're doing out of your basement. This is an actual company. You've got lots of employees, the whole bit, right?
Well, it's a good question. It actually is something that I did out of my basement, or rather my dining room table, for a number of years. So for the first 4 years, we actually ran the business out of originally a home I was renting and then a townhome. And so I eventually moved to the basement and ran the business on the top 2 floors. And now for the last year, we've been operating out of an office at King and George, so right around the corner from the St. Lawrence Market in Toronto, and we're moving to our next office, which is twice as big. It's 3,700 square feet, and that's going to be at Richmond and Ontario Street.
Very cool. So, okay, so let's talk about Rate Hub then. And first of all, tell us what the address is. It's ratehub.ca, right?
Yeah.
Okay, so I go to ratehub.ca, and what can I do?
So we often, when we're talking about ratehub.ca, we often go to mortgages first, and that's where we spent the first 5 years of operations exclusively focused on mortgages. And the idea was that you come to the website and you let us know what you're looking for, 5-year fixed rates in Toronto, for example, and we list all of the providers from lowest rate to highest rate. And so that would include brokers as well as banks and some of the other mortgage lenders. But then we also show you some of the important features that go alongside your mortgage, so things like the prepayment options, for example. We let you know how many days you can hold the rate. And then our whole business model is once a user's interested in a specific rate offered by a provider, we connect the user to the mortgage broker. So
there's a couple of questions that stem from that. Then my first question is, so I'm a user, I'm on your website. What does it cost me?
So for users, we're absolutely free.
It's free. Okay.
Yep.
So I can go on, I can find the best rate, and then you say I get put in touch with whoever has that rate. Obviously, that's the whole point.
Mm-hmm. And
so
doing that, it's important to note that you can see, you can see many different rates, and it's only if you choose as a user to find out more or call the provider that we put you in touch.
Gotcha. So it's not like you're, sending my name to them or anything like that.
Yeah.
So I select that I want this, 5-year fixed rate with 3% interest or whatever the terms are. And then I click the button, and then what happens next? I put in some additional information at that point. How does it work?
Yeah, so it's really simple. You list your name, your phone number, your email address, and then that gets sent directly to the provider advertising the rate, and then they would give you a call back directly.
Gotcha. So you're just putting, person A in touch with company B, and presumably that's how you get compensated. Then that it's the mortgage provider in this case who is compensating you.
Exactly, and we call it a lead generation model. So we don't earn a percentage of the deal if it closes. We earn a fixed dollar amount per lead that we send.
Gotcha.
Something that we've done more recently in the last year is we actually launched our own mortgage brokerage as well. So some of the leads, you would be in touch with someone from CanWise Financial, which is our in-house mortgage brokerage.
Gotcha. But I guess you're completely, other than I guess your internal brokerage, you're completely agnostic as to which one I pick. You're getting the same, referral fee from whoever I go to. So, you're happy as, whoever I pick.
Exactly. And rates are they're just, sorted from lowest to highest. And so that's what determines who rises to the top.
Now, the other thing you mentioned then was about features. So, because I'm sitting here going, well, okay, lowest to highest, give me the lowest. What's to think about? Why do I care about features? So tell me why, as a consumer, I should care about features. What kind of features should I be thinking about?
It's a great question. I mean, one of the most important is the prepayment options that come with your mortgage. So if you're someone that receives a bonus or part of your compensation through commission, and you want the opportunity to, put a lump sum down against your mortgage, your prepayment options might say, okay, you can pay off up to 20% of your mortgage balance each year. One mortgage might offer 20%, one mortgage might offer 10%. So you want to think about, how likely are you to use that feature, and is it important to you when you're doing your comparisons. Sometimes the rate hold, you might look at a low rate, but it's only available for 30 days, but you haven't purchased a house yet and you're actually looking for a pre-approval, so you might have to go for a different rate.
I got you.
Yeah, so those are some of the features. We're also starting to see in the industry some changes where, depending on your down payment, you might qualify for a specific set of rates. And so those are some of the features we're going to have to start incorporating into the website as it's become more and more popular to start offering differentiating rates based on down payment.
And so when I look at the quotes, I can see the features as well. So I may not pick the lowest interest rate because what's really important to me is the prepayment feature, for example.
It's true, but we have found that most people still submit to the lowest rate. I mean, that is what people want when they're going online searching for the best rates. And so at that point, they can also connect with the mortgage provider and have a discussion about, whether the product suits their needs and then go from there.
Gotcha. Okay. So, but I think you're making a very valid point here, and that is it's not just the interest rate that's the only factor to consider. There are other features. So obviously the rate is the starting point.
Absolutely. And a big thing too is just, are you able to qualify with a specific lender? So there's lots of things going on. Some people might be self-employed and have more difficulties verifying their income. Some people may be on a contract basis. Some people may be newer to Canada. So you really have to look too at, once you connect with that provider, is it a great rate if you are in a unique position?
And you're not necessarily going to know that until you actually talk to the lender.
Exactly. And so that is the type of stuff as we at Rate Hub think about, how do we continue to innovate? What does the next version of Rate Hub look like? We're starting to experiment with some of, I guess we could call it increased segmentation.
Yeah, so you can narrow it down even more finely and get the things I want. Because it's already narrowed down by geography, right? So if I'm in Toronto or Windsor or wherever, I can be put in touch with a local person.
Exactly.
Is it how it works? Okay. Now, it's not just mortgage rates that you've got on the site. There's also a section on credit cards. So is it the same kind of thought process there?
A little bit. So as I mentioned, we spent the first 5 years solely focused on mortgages, and then in 2015 we launched credit cards, GICs, and high interest savings account comparisons. So on the credit card side, what we're really trying to do is say, based on what you spend each year, what credit card will give you the most value? And so how we drive at that is we say, okay, what are the rewards you're going to earn based on your spending? But then we have to subtract the annual fee. And then we also add in any sign-up bonuses you'd get in the first year. So we try to say, okay, based on your spending pattern, you can expect to get $350 net value from your credit card in year one, and that may go down to $250 every year thereafter once the sign-up bonus goes away. But we show both of those numbers.
And so in that example, you're talking about someone who pays off their credit card every month.
Great point. Yes. So those are our rewards credit cards, and that's a really good point. You only earn that value if you're not paying interest. So, the credit cards with the annual fees and the high interest rates really only make sense for people who can reliably pay their bill each month. We do compare other credit cards like low interest, balance transfer, and secured. And so for someone who's less excited about the rewards and more concerned about carrying a balance and paying that off, some of the cards on our site have interest rates as low as 9.99%.
So if I'm sitting here today and I want to get out of debt, and I know one of the obvious things to do is lower the interest rate I'm paying, then it is possible to go here and say, okay, show me what the low interest credit cards are.
Exactly.
And if I can get a low interest card that maybe has some rewards, great, but that's not going to be my focus. My focus is what's the lowest interest rate, because then I'll transfer the balance from my high rate one to my low rate one and get out of debt quicker. Whereas if I'm already completely out of debt, a credit card is just a means of, it's a substitute for cash. Instead of carrying cash in my wallet, I'm using it, then I can look at the rewards.
Exactly. And if you're going to use, I use my credit card for almost every purchase, and so it's really important to me to maximize the rewards. But if you look at our low-interest credit cards, they're not sorted by rewards. They're sorted from lowest to highest on interest rate.
So you have to decide what you're looking for and then look for that.
Secured is another interesting option. So some people who have bruised credit, or maybe they're new to Canada and they don't have a credit history, secured cards can be a great way for them to get started. Because, so with so many purchases happening online, it becomes even more important. For people that are carrying credit card balances, we're actually seeing in the we call it the fintech space, so startups that are centered around financial services, there's a lot of marketplace lenders that have come to market in more recently. And so the companies, just as an example, GroupLend and Borrowell, they're offering loans at much lower interest rates than credit cards, and they're able to approve people online. And so, that's an area that RateHub may get into in the future as well, starting to compare some of those marketplace lenders by interest rates to really help people who are carrying balances.
Yeah, and it's interesting because you're right. You're getting into areas that are more than just interest rates. I mean, as a bankruptcy guy, I'm sitting here thinking, gee, I wonder what their collection practices are. And that would be really cool if you could put that on the site too. And I realize you can't because it changes all the time. But is this the kind of lender who, well, if I'm one day late, they're taking me to court, or is this the kind of lender who's perhaps a little more willing to work with me? But I think the basic things obviously are the interest rates and the features. You've got to decide for yourself what makes the most sense. Do you find that those things change very frequently?
They can. So, and especially when you've got hundreds of cards on the website, it does take a lot to keep up with. Many of the banks, though, will send out product feature grids. So anytime they make changes to their sign-up rewards, or if they were to change their interest rate, things like that, they'll push them out to us, and then we reflect that on the site.
So just because I got a credit card with really good rewards or a really good rate last year, there's no reason I shouldn't be checking again. There may be, in fact, probably is a completely different deal today. Yeah,
and we definitely, even in my own friend groups, we see a lot of people that have a credit card that they've had for 5 to 10 years, and there's been a lot of innovation in credit cards, and there's a lot of products that have very flexible reward options. So, you can use it for travel across any airline and in any hotel. And so those ones are gaining a lot of popularity because, those of us with points have all come across blackout dates and, trying to book on a system where we're only allowed to get one book through one airline. So it's really great to see the innovation, and Capital One is a good example. They had a really great sign-up bonus and an awesome credit card. They took their sign-up bonus away, and now they're bringing it back. So I think, consumers must have let them know how important that was to them, or they saw their sign-ups and their new acquisitions go down, and so they responded, which is great.
Yeah, I guess if I can get a sign-up bonus by switching somewhere else, then that's what I'm going to do. So
yeah.
Now, just so people don't think that your site is all about debt, you've also got the ability to compare things like GICs and savings accounts. Is that correct?
Yeah, absolutely. And that's, in both of those cases, we actually sort rates, of course, from highest to lowest.
Sure.
So the focus of those sections is where can I get the most return for my savings?
And so you would look at them by obviously term, 90 days, 1 year, 3 year, 5 year, that kind of thing.
Exactly.
And are there, and I assume that's conceptually pretty simple. Okay, well, what's the highest rate? What are the other factors then that I would be thinking about when I'm looking at that? Like, for example, is it going to be different if I can, put it in my RSP or not?
Yeah, it can be. So we showcase registered versus non-registered rates. So that's a big one.
And so are there any other features that would matter, or is it really pretty simple? It's, is it registered or non-registered? Is it, can I put it in my TFSA or not?
Yeah, that's a great one. Another big thing is if we're talking about GICs, how do you buy it? So if many of us have online brokerage accounts through our banks, or we might have a financial advisor through our banks, then you can only purchase some products from within their system. Does that make sense?
Yep. Yeah.
And so we showcase, this GIC is available through most deposit brokers, discount brokerages, investment advisors. But sometimes you can get higher rates if you open an account directly with the provider because they're incenting you to come on as a customer. And so that may or may not be worth it for you, depending on how much higher the rate is, depending on how much you're putting in.
Yeah, if I have to completely switch banks to do it and I'm going to, earn 0.005 of an extra percent, then maybe it's not worth it. Or, If I'm not happy with my current bank, well, maybe it is totally worth it. So again, it becomes a case of shopping around, right?
Exactly. And CDIC insurance, so making sure that the deposit is insured.
So can I tell that from your site, or is that something I have to research on my own?
That is one of the things we show in our comparison charts.
So there may be a really great interest rate, but it's some company I've never heard of as opposed to with a big bank. I can then make the decision, well, am I concerned about giving my money to them? Well, if they're CDIC insured, then I guess I don't have as big a worry about it then.
Yeah, and you would decide how important that is to you, and again, trade off if there's any, if you're going with a lower interest rate as an example.
And then we talked about GICs. You do the same thing with savings accounts, is that correct?
Yeah, we're focused on high interest savings accounts. And with those products, we see a lot of teaser rates. So open an account and earn 2.5%. But oftentimes that 2.5% is only for a period of 3 to 6 months. And so we also look at, if that rate is only valid for a certain period of time, what does your return look like over the full year? And so that really helps people, kind of sift through the marketing noise.
Gotcha. And so, but that may also be a case where I come back to the site in 6 months and find another one. I mean,
exactly.
I guess if you have to lock in for a year, then you're locked in for a year, but it's something you want to keep researching.
Yeah, and high interest savings accounts, they're less likely to be locked in for a specific term, whereas GICs, it's different.
Gotcha.
But yeah, I think it's very important to look at the teaser rates because they can be very appealing, but they don't actually, if you're planning to leave your money in for a year, they don't actually result in a higher return. You're better off to go with a higher average return.
Yeah, and again, that's where the research comes in and where you got to think about it. So there's definitely a difference between a GIC and a high interest savings account. Well, that's an excellent introduction to the site. We're going to take a break and come back with a few more questions. But once again, the website is ratehub.ca, exactly how it's spelled, ratehub.ca. And we'll be right back to wrap it up. You're listening to Debt Free in 30.
You're listening to Debt Free in 30. Here's your host, Doug Hoyes.
Welcome back. It's time for the 30-second recap of what we discussed today. On today's show, Alyssa Furtado of ratehub.ca told us that it's important to shop around for all financial products because the savings can be significant. That's the 30-second recap of what we discussed today, and that's our show for today. Full show notes are available on our website, including links to information on ratehub.ca, so please go to hoyes.com, that's HOYES.com, for more information. Thanks for listening. Until next week, I'm Doug Hoyes. That was Debt Free in 30.